This is the last video of the 4-part series that I've put out on gold. This one we are going to dedicate to sovereign gold bonds. We are going to break this video into 3 parts. The first part, we're going to tell you about the features. The second part, I'm going to tell you what are the various avenues through which you can invest in gold. And the third part is going to be related to the second part, wherein we say, okay, these are the avenues other than the sovereign gold bonds which are available to us to invest in gold. So, what are the positives and what are the limitations of these bonds vis-a-vis those? Okay, so let's start with the features first. Just as a background, the government of India has authorized issue of sovereign gold bonds, 6 series in total from March till September. So this one, which is coming out on the 31st of August, is the 6th series. It's going to be on till the 4th of September, and it's going to get issued on the 8th of September. Now, as the name suggests, these are bonds issued by RBI on behalf of the government. The tenure of these bonds is 8 years. After 5 years, you have a premature exit option. The minimum that you can invest in this is a gram, which is roughly about 5,000 rupees. The maximum that you can invest in this for individuals and HUFs is 4 kgs, and for the others is 20 kgs. How do you calculate the issue price and the maturity price? Small bit of a technicality which I'll just spell out. So supposing, let's say, the maturity of the bond is due on Thursday of 2028, whatever month. So you will take a simple average of Monday, Tuesday and Wednesday's price, and that will be a maturity price, right? And similarly, you do the same calculation for your issue price. For part 2 of this video, I'm going to tell you what are the avenues that are available to you if you want to invest in gold. Of course, you have the sovereign gold bonds, which are available. The second option for you is physical gold where you can go and buy jewelry, or you can go and buy gold coins and bars. The next option available to you is digital gold. You can actually buy gold online now. Phone Pay, Amazon Pay, Google Pay, these are avenues through which you can buy. The sellers MMTCPAMP, which is one issuer. The second one is Safe Gold, and the third one is Augmont. I'm sorry, I don't know how to pronounce that, but I hope I've got it right. Then exchange traded funds, tried and tested, been around in the market for a long time. These are funds which are traded on NSE and BSE. The underlying is gold. Another option is gold funds. Gold funds, most of them are just wrappers around the exchange traded fund, and essentially an avenue for you to invest if you don't have a demat account, right? Between the two, if I have a demat account, I'll go for an exchange traded fund. Now, let's say I want to take exposure into gold, but in dollar terms. I am going to go outside, I'm going to live outside, or I need to build money for my children's education, and I anticipate that happening in dollars. Then what do? You know that you're allowed to remit $250,000 through the liberalized remittance scheme every financial year. You can use that money, open an account with a broker out there. There are lots of brokers available which you can operate online also now. And you can buy exchange traded funds, you can buy stocks, dealing with gold mining companies there. There is also an option which is available for very high net worth individuals, but through this LRS route, you could take part in certain structures wherein you are protected on the downside of gold, and on the upside you get the participation. There are some ifs and buts, but that we'll get into once the structure comes through in terms of it being ready. Okay. So coming back, there's yet another variant through which you can participate in gold. DSP has a gold mining fund called DSP World Gold Mining Fund. It invests into stocks which are listed internationally of these mining companies. So these are the avenues that you can invest into gold through. And now for the concluding part. What is it that we like about sovereign gold bonds vis-a-vis the other avenues of investing? And now when I'm doing a comparison, I'm just going to compare it to the forms of investing which are available in INR, leaving aside the gold mining fund, right? So let's go. The first one is 2.5% annualized interest rate that is payable. No other option is giving you that avenue or that extra return. So that's the reason we like it. It's issued by Government of India, highest credit, not risk, but the highest credit that you can get. So that's another reason why we like sovereign gold bonds. You can use them as collateral for a loan that you might want to take. Other than physical gold, there is no other option within those gold investment avenues which allows the use of gold to be a collateral. Then we like the fact that it's tax-free at maturity. Lastly, we also like it because it's the most cost-efficient way of investing into gold. Now, let me give you a comparison here. So when I take physical gold and I take digital gold and digital gold both have a GST of 3%. And in addition to that, digital gold will also entail storage costs, which can be in the region of 2 to 3%, I believe. When I compare it to mutual funds and exchange traded funds generally have an expense ratio of 0.5 to 1%. Mutual funds are more or less wrappers on these exchange traded funds, and therefore, in addition to this 0.5 to 1%, they will entail another charge of 0.5 to 1%. So, it's the most cost efficient manner in which you can invest in gold in INR. Okay, now so what is it that I do not like about this? I'm going to pull out a chart here and I want you to look at this very carefully. You see, in the aftermath of the global financial crisis, gold rallied. I would assume it was on account of liquidity. And for that, to understand that, you would need to go back to my earlier videos. After it rallied, there was a lull. So if you invested in gold on 30th of August in 2013, it wasn't until 2019 that you got back to your principal value of investment. Till then, you were making a loss. It took you almost 6 years to get back into that sphere, right? Now, that crisis was similar to what we are going through now. So, God forbid, if we get into that lull period, okay, then I don't want to be invested into something that locks me down for 8 years. I know that there is an option for it to trade on the stock exchange, but I did a little homework on that, and the volumes in that is very little. Per series is hardly in lakhs. So this is the only thing which I don't like about the sovereign gold bonds. How do we work around that now? We could do ETFs, okay? We could also do digital gold. Digital gold is relatively new in India. All the nuances of it haven't unfolded. So if I were to do digital gold, I would be very careful in going through the agreement. Who is it lying in custody with the gold, right? After you've bought it, is there a trustee involved? What happens if all hell breaks loose? What are your protection points? So these are some of the details that you need to go into when you are custodizing your gold with someone other than yourself, right? So yes, with that final conclusion, I hope you've enjoyed the series and good night.